Welcome to The Explainer. Okay, let's just jump right in. The market right now, it's caught in this classic tug of war. We've got good news on trade pulling one way and some pretty startling inflation data pulling the other, all with a series of pivotal events lined up on the calendar.
So here's the plan. First, we're going to break down that market tug of war and the key events driving it. Then we'll take a look at how traders are positioned and thinking. And finally, we'll connect all the dots to see what really moves what this week.
All right, so let's get into it. The central conflict for markets right now is this really clear battle between the good news and the bad news.
On the positive side, we've got some major tariff relief, which is great. The US-China truce was extended, and there's a new US-EU deal that should lower duties. But pushing back against all that is a surprisingly high inflation number for producers, and that has definitely spooked the market and cast some serious doubt on future interest rate cuts from the Fed.
Now this is where it gets really interesting, because the real story is the gap between these two key numbers. Consumer inflation, what we call CPI, was pretty calm, up just 0.2%, but producer inflation, or PPI, jumped a lot. And since those higher costs for producers often get passed on to us consumers later, well, this split has put the entire market on high alert.
And yeah, a 0.9% jump in a single month, that is a huge deal. It's just a stark reminder that the threat of inflation is far from over.
So this inflation surprise, it's not happening in a vacuum, right? It's really setting the stage for what is a super packed week with a ton of market-moving events. And believe me, this week is absolutely packed. Monday brings a key diplomatic meeting. Then Wednesday, all eyes are on the Fed minutes. But Thursday is really the main event. The Jackson Hole Symposium kicks off, and it features a big speech from Fed Chair Powell, right alongside some key economic data releases.
Okay, but it's not just about the economic calendar. There are some major geopolitical events happening that could have immediate market impacts, and traders are definitely watching.
For example, President Zelensky's visit to Washington is a big one. Any little hint of de-escalation could move oil and defense stocks. And at the same time, an Israeli strike in Yemen is highlighting the ongoing risks to shipping in the Red Sea, which of course directly impacts oil and freight costs.
All right, so we've got the good news, the bad news, all these upcoming events. The big question is, how are the major markets actually positioned? Where are the battle lines drawn?
When you look at a chart like this, it's helpful to think of support as a floor where buyers tend to step in, and resistance as a ceiling where sellers usually show up. For the S&P 500, that floor is right around 6,420. For Bitcoin, that big ceiling to watch is 120,000. These are the key zones where the market's tug of war is really going to be fought this week.
Okay, now full disclosure, this is absolutely not investment advice, but it's always fascinating to see how the pros might think about this stuff. So let's break down one potential game plan.
So one common professional strategy is what's called a range fade, and it's basically a bet on inaction. The thesis is, if the Fed says nothing shocking, the S&P 500 will probably just bounce between its key levels. The setup? Pretty simple. Sell near the top of the range, buy near the bottom. But, and this is a big but, the risk is crystal clear. One hawkish comment from the Fed about that inflation number, and the whole trade could fall apart.
Okay, let's pull all these threads together. With everything we've looked at, what are the absolute biggest forces we need to be tracking this week?
You can see it right here. The Fed's tone is clearly the biggest market driver this week, making up about 40% of the risk. But, and this is important, it's not the whole story. Trade policy is still a massive factor, and a surprise geopolitical headline could easily steal the show. This quote really captures the mood perfectly. Despite a calendar that is packed with risk, the market isn't really panicking. It's priced for everything to turn out fine. Now, you could look at that as confidence, or you could see it as complacency. And that really leaves us with our final thought. The VIX, which people often call the market's fear gauge, is really, really low. So, in a market that isn't showing much fear, despite all these moving parts, could the lack of fear itself be the one thing we should be watching most closely? Thanks for joining The Explainer.